There are, and if you put everything together, it looks like something of a perfect storm. And this is why the market has pushed down multiples of food stocks to levels not seen for over a decade. And as you say, sentiment is probably where it was, maybe the year 1999 or 2000 in my coverage history. Certainly, you've got the end of inflation. That's been a key driver of organic sales growth. You've got concerns about volume mix. Will volume mix be able to get going again? Now we've had that inflationary spur and volume mix has been very weak. You've got the GLP-1s, as you mentioned. You've got the ultra-processed foods. You've also got concerns about environmental costs these guys need to stomp up for, given food is the biggest contributor to greenhouse gases. So a bit of a perfect storm around these issues.
Yeah, look, I mean, I read a very thought-provoking book called Ultra-Processed People by Chris Van Tulken. I don't know if you've read that one. If you haven't, it's very interesting, whether you agree or not with the premise in it as well. But the fact is, he does take many swipes at these big companies, at the Reckitt's, the Nestle's, the Proctors, the Mondelez of this world as well. That said, and if I just move on, the share price have come off, but they still don't look cheap. I mean, I look at Nestle, which trades at 18.7 times forward. It's cheaper than it was. The shares have come off quite aggressively. We've just put a chart up. I'll show that as well. But they don't look cheap compared with the broader market, John.
What you're actually seeing is the premium, the traditional premium of these long-term compounders to the market has narrowed considerably. We're probably, one, if not two standard deviations below that premium. So the food companies have always commanded a premium because they've typically been able to grow at least mid-single digit with some sort of margin expansion with a dividend, typically double-digit local currency return. So, typically these are quality stocks. So yes, they're not trading down at 10 times PE. However, if you start to dig into some of these food stocks, they actually are. Look at where Kraft Heinz is in the US. Look at where JD Peet's is in Europe. So there has been this decompression of multiples. Could it go on? Of course, that's a risk. But I think there are a variety of factors to say we're probably at the bottom in terms of food, the attitude towards food. We've just had a big conference here, a lot of interest in food, given what's happening with this big bubble maybe in tech. Is it time to look at defensives? And you can imagine as we go through the year, as volume mix recovers, as maybe some of these concerns disappear or fade, as interest rates decline. Interest rates is a big deal. Remember the Swiss cut rates yesterday. Basically, as interest rates come down, these bond proxies should also be well supported.